Great, and welcome to our today's session. This is financial reporting and analysis, and we are going to look at group consolidation. We are going to look at group consolidation. This is a topic under financial reporting and analysis, and it is highly examinable. I can say that this is a compulsory topic. This is a compulsory topic. As far as you are expected to do this paper coming August, kindly know that you not miss a question from group consolidation, a question from group consolidation. So class, when you hear of the term group consolidation, what comes to your mind? When you hear of the term group consolidation, what comes to your mind? What comes to your mind? When you hear of the term group consolidation, what comes to your mind? Or consolidation. Let's just split it and use consolidation. When you hear of the term consolidate. In a layman's language, consolidate. In a layman's language, what does consolidator mean? I can see Paul is telling us this is to combine, combining. Great. Thank you so much, Paul. Let me get a variety of responses in a layman's language. In a layman's language, we can get variety of responses. Sorry. Consolidate. Paul anatuambia kwamba it is to combine. What are we combining here? Remember, we are trying to lay the base of this topic. We are laying the base, and I'm telling you, these are topics that you never miss. Question from group consolidation. You cannot miss during exam. Bringing together, that is first task. Great. Bringing together, consolidate. Integrate, it is the opposite of, you can say it is the opposite of integrate. True of us. Integrate. Opposite of integrate. True of us. Great. Class, anytime you hear of group consolidation, just know that we are trying to bring together the items of one company with those of the other company. We are trying to bring together either item of income or expenses of company A together with those of company B. But there are some of the rules that we are going to look at that will help us to know how to bring those items together, because we shall say we have different types of company. Of which there is one company which will be the parent and another company will be the child. Or the subsidiary company. So we're going to look at those principles that govern us or guide us on how to prepare the group consolidation. So the first thing, Yasmin anatuambia ni to merge. That I think that one is taking us far. To merge is taking us far. It's taking us far. So remember, under financial reporting or advanced financial reporting, we're being guided by standard. So there are some of the standards that govern us on how to prepare the group consolidation. For example, International Financial Reporting Standard 3. International Financial Reporting Standard 3. International Financial Reporting Standard 10. You see the two. Those two are going to govern us on how to prepare the group consolidation. They are going to govern us on how to prepare the group consolidation. These deal with the combination, business combination. I have seen somebody telling us this combining or to consolidate is to bring together items of one company with those of another, but we shall be following a certain standard. Still, this one, it helps us to present the group consolidation statement. Still, we have another one here, IAS 28. So class, generally, under this topic, whether you go to advanced level or under intermediate level, those are the standards that you will be using so that you are able to do what? You are able to consolidate. And we have said that to consolidate is to bring together items of income or expenses of a certain company given a certain standard, so that at least the controlling company is able to prepare what? To prepare the financial statement. Financial statement in this angle is the income statement together with the statement of financial position, So being guided by this standard, I want us to look at types of company that we shall be having, types of companies. The types of company that we shall be having here, one of the company, we shall call it a parent company, One of the company is the parent company. And then we shall be having, sometimes those people who have done degree, they were calling it holding company. They can tell you that they did this and they were calling it holding company. Then we have subsidiary company, subsidiary company. Subsidiary company. Number 3, you can guess the third company type, that we may have here. Third company type. Somebody to give me the third company. Just guess. Even if you fail, so what? Nothing. Just try. Who do you think? Subsidiary, subsidiary, good. That's a good trial. Sheila, joint venture. And number 4, we can have associate company. And then we have a mere what? A mere investment. Just a simple. Let's just use a simple investment. So whatever that you shall be looking at under this topic of group consolidation, you're going to revolve around these types of company. We're going to look at how do we identify which is parent company, how do we identify which is subsidiary company, as well as joint venture together with the associate. For the simple investment, for that one, we shall not be looking at that. But for the rest, now for the parent and subsidiary, IFRS 3 and IFRS 10 are governors. For the joint venture and the associate company, we shall be guided by IAS 28. We shall see how to do that. So the first thing that you're supposed to appreciate is to appreciate the types of company that we shall be dealing with. And here are the companies that we shall be dealing with. Now, you can see that we have said that we are having a parent company. So if you have a parent company, whatever that you shall be following is the children to this company. So it has a greater shareholding, and therefore it has control. It's known as the parent company since it has control over the other company. So the control, you can look at the control through two ways. You can look at the control through the shareholding or the number of what? The number of directors that this company has. That will guide you and tell you for sure this is a what? This is a parent company. For example, assume I have two companies here. And namely A and B. Company A and company B. Company A and company B here. I want you people to guide me here. Company A and company B. I'm told that company A acquired 70% audience shares of company B. 70% audience share of company B. Now, for the company B, can you give me the name I should give company B and company A? Who is company A? Who is company B? Depending on the types of company that we have looked at. Somebody. Today we are laying the basis. We lay the basis. You know what we do. We lay the basis, and then like that we go, and then we can do a question. I can see Leonida Matunda, a very great name there. This lunchtime Matunda, that is very good. She's telling us that most of the people are saying that A is the holding company or the parent company, B is the subsidiary. Great. These are great team. These are great team. These are great team. Yes, these are great team. Yeah, already you know that since A has acquired 70%, which is a greater proportion of shares of B, that gives A the mandate to be called the parent company. So in that case, our company A is the parent company or the holding company. And then B in that case will be the subsidiary company. Subsidiary company. So class, if you were to end our session at that point, at least you are able to know or to differentiate between the parent company and the subsidiary company. But there are some of the things that you need to know regarding the same. There are some of the things that you need to know regarding the same. So if if the parent company acquire more than 50%, this is now important. If parent company acquire, this is important for everyone, acquire more than 50% of shares, 50% of shares of another company, if parent company acquire more than 50% of shares of another company, that other company will be a subsidiary. This is when we are looking at the when our bases are what? When our bases are on shares. When our bases are on shares. So when the parent company acquire more than 50% of shares, more than 50%. Kindly check here, more than 50%, not 50%, not 50%, more than 50%. So it is 50% plus 1, or 50.5 like that, but it should be more than 50%. In such instance, when you are basing our argument on shares, that means the other company which the parent company has acquired more than 50%, it will automatically be what? It will automatically be a subsidiary company. It will automatically be a subsidiary company. Class, I would like to know whether we are together as far as this information is concerned before I move to the next part. Are we together as far as this information is concerned? Kindly, because you need to understand that. That's the key. Good. Thank you so much for that confirmation. Now we proceed to the next part so that we are able to split and to understand what about now the associate company. How do I identify the joint venture? How do I identify the other company like that? Now, we have already taken care of 50% going all through to maybe 99%. Maybe to 99% already. We've known that company whose shares more than 50 acquired by another company, that one we have said that it will fall under subsidiary. Good. Now, what about now below 50%? So if a company acquire a certain percentage, which is 19% up to 49%, maybe 49.99%, if a company acquire 19% up to 49.99%, that company whose share has been acquired ranging to these percentages, we refer to that company as an associate. So if you find examiner give you a question whereby the shares acquired by a certain company which ranges between 19% to 49.99%, in between there, that other company become what? It become our associate. It become our associate. Of course, now 0 to 19, that will be our mere what? Our simple investment. 0 to 19, it's simple investment, of which we don't look at that. We don't look at that. What about now the joint venture? The joint venture here, the joint venture. Who can now guess? Joint venture. When do we say that a company now is a joint venture? The joint venture. Joint venture. Joint venture. Joint venture. Already we have looked at the parent. We know the parent now. We know how we can identify the parent. We know how we can identify the subsidiary. And now we are looking at that. Already we have also looked at the associate. What about the joint venture? 50-50. This is Sheila. Great. People, you're good. These are CPM extras. Equal shares. Equal shares. Yes, mean when the shares are share equally. When the shares, okay. When, all right. Thank you so much. Yes. That is it. So in the cases whereby you are told that A Limited acquire 50% of B Limited, like that, you know that now B Limited will be their joint venture. It will be a joint venture. And what is the key here is that for the joint venture together with the associate, kindly once you identify joint venture, once you identify the associate, we're going to use this standard, International Accounting Standard 28, to do what? To execute or to come up with a group consolidation, consolidation. So IAS 28 tells us about the equity, that we do not consolidate items of the associate nor those of the joint venture. We should not consolidate or bring together items of the associate or those of the joint venture except for one: profit share. That is under income statement. On the other hand, when it comes to the statement of financial position, you should not consolidate items of the asset or liability of the statement of financial position except for one item, unless otherwise stated. Except for one item, unless otherwise stated. And that item is in the investment in what? In associate. Investment in associate. But class, today, I don't want to mention, or I don't want to go to the joint venture. I don't want to go to the associate. I just want us to have a basic on the subsidiary and also the parent company, together with what they entail. Therefore, in that regard, allow me to just mention some of the things that we need to understand here. Class, I know you have ever heard, you accountants, you have ever heard of goodwill. Some people telling you of goodwill. Who do you think is the goodwill? And remember, we are discussing. I get it from you, you get it from me. At the end there, we get what we need. What is goodwill? Remember, when we are acquiring this company, there will be some goodwill for the company that we are acquiring. We want to acquire the items, the assets of this company together with the goodwill. Remember, goodwill is an asset. Which type of asset? Reputation, Festus. Naona tunaenda njia moja. Moving at the same track here. Festus, asante. Anasema kwamba when you hear the term goodwill, it is the reputation of the business. It is the reputation of the business or the reputation of the organization. Reputation of the organization, so company. Now, how do we measure reputation? How do you measure reputation? Liza anatuambia consideration. Sasa ndio, we measure through money consideration. Reputation is measured through money consideration. Whatever that Liz is telling us there. Reputation. Iyo reputation, iyo gumo. Gumo in quote. Ushaenda kuweka biashara mahali, anakuambia you should pay a goodwill of 500,000. That is determined by several factors: location of that business, and then What else? Can you give me some of the factor that will determine the goodwill? Some of the factor that will determine the goodwill. One, location. Ipu. I know your business people. Know your business people. Let me get one. Location. So that's assignment. That's assignment. Some of the factor that will affect the goodwill, infrastructure. Yes, Festa. Yes. Thank you. Thank you so much. Now, I want us to mention of these goodwill. Remember, at the time that we are going to acquire a certain company or duration, all right? When we are going to acquire that company, the company had its own reputation, So we're going to value and to see your goodwill equal valued at how much? How much is this goodwill valued at? How much is this goodwill valued at? So that at the end of the day, if there will be things to do with the impairment as such, we are able to do what? We are able to compute. We are able to compute and get the value to record when we are preparing our statement of what? Statement of financial position. So when it comes to the goodwill, we have two types of goodwill or two methods of computing goodwill. The first one is direct method. The other one is indirect method. But we give them some names here. Full goodwill method and partial goodwill method. We have two methods. Methods of computing goodwill. We have two methods. First one we have said is a partial goodwill method. Partial goodwill method. And the second one, class, pili, it's full goodwill method. Full goodwill method. Partial goodwill method and full goodwill method. So in this case, if we talk of partial goodwill method, is whereby we are looking at the consideration, the purchase consideration, and then we deduct any net asset at the date of what? Acquisition. Net asset at the date of acquisition. Purchase consideration less net asset at the date of acquisition. Net asset at the date of acquisition. I'd like to maybe mention something here. When we talk about net asset, we're looking at the equity items. We're looking at the equity items, ordinary share capital, retained earning, at the date of what? At the date of acquisition. That date that we acquired this company, what were the net asset value? Net asset value as at that date of acquisition. Ordinary share capital ilikuwa ngapi? Retained earning ilikuwa ngapi? Revaluation, did we have any revaluation? Ngapi? That one can build our what? Can build our net asset. But we shall be looking at a portion of which we acquired. How much did we acquire? For example, if I can put this formula down for partial goodwill method, partial goodwill method class, here it is. You can maybe have your shillings in two columns there. Purchase consideration. Tununua pesa ngapi? Just put it down there. Purchase consideration. Then, what are some of the net assets? You less net asset at the date of acquisition. At the date of acquisition. Net asset at the date of acquisition. Class, for the net asset, I've told you that these are equity items. Under the balance sheet, under equity item, we have we have ordinary share, retained earning, revaluation is also part of this. So all those items, we shall be looking at their value as at that date that we acquired either company B, as at that date. So we shall be putting them down like that, Shall be putting them down like that. But remember, this net asset, there's that proportion that the parent acquired. For example, in our company A here, acquired 70% of company B. Now, our company B, as you told me, that is my subsidiary company. Therefore, whatever that company A has acquired from this net asset, it is not 100%, but what? 70%. So you're going to look at 70% of this value, 70% of that value. And whatever that you get there is what you're coming to do what? To subtract from what? The purchase consideration. And whatever that you get there, it will be the goodwill at the date of what? Acquisition. At the date of acquisition. Very important point here to note. If this is now goodwill at the date of acquisition, note here, if there was impairment of goodwill, examiner will give you details. Tells you under additional information that there was impairment of goodwill of 25%. There was impairment of goodwill of 20%. You're going to less impairment of goodwill. Impairment of goodwill. And it will be that percentage given by the examiner. Let's assume it is 20%. So it's 20% of this one. You get a value there, and then you less that value. Whatever that you get there is what we say it is goodwill at reporting. Goodwill at reporting. And it is the goodwill that we shall be using at our what? At our balance sheet. Goodwill at reporting. I have to adjust my board a little bit. And I don't want to goodwill at reporting. That is where we are. Goodwill at reporting. Goodwill at reporting. This is very important here. This is very important for me. And I want you to note, if this is now the goodwill at reporting, the goodwill to record under the non-current asset, of course, remember goodwill is our intangible asset. We are going to record it under a non-current asset as our intangible asset. This is the figure you pick and you take it to the balance sheet. But if there were no impairment, of goodwill, this is the value that we use at the end of the period when we are preparing the statement of financial position. We use this goodwill. So this will be the goodwill at reporting in the case whereby we don't have what? The impairment. Kindly someone, let me know whether we are together up to that point. If you have understood this concept, have you understood the concept? Are we really together? Utapatana nazo. Hizi utapatana nazo. Now from here, I'd like you to go and check all the past paper, maybe from 2015, wachana na hizo zingine, angalia tu from 2015 to 2024, and then tell me whether there's a past paper without the group question. Even don't do, usifanye, we jaribu tu, angalie swali ya group, and then ufanye nini? Uiangalie, usoma additional information like that, afu uone. Group question is a compulsory question. So class, when it comes to the full goodwill method, there are some of the things that examiner will give you. For example, full goodwill method. Full goodwill method. Examiner will give you NCI, or information that you can be able to do what? You can be able to compute NCI. What is NCI in full? Leo tumesema ni siku ya sisi kufanya nini? Kuweka the ground ama foundation, the foundation. What is the full meaning of NCI? So the full meaning of NCI. Non-controlling interest. Asante. Thank you so much. This is very nice. Non-controlling interest. Non-controlling interest. Asante. Thank you so much. Now, examiner will give you the NCI in that regard, whereby non-controlling interest, it is the percentage. Yeah? If A acquired 75%, if A acquired 75% of shares of the other company, the remaining percentage for us to get to 100%, that is what we refer to as non-controlling interest. Non-controlling interest. That 25% is for the non-controlling interest. Because now the parent company has control over the subsidiary. Now the subsidiary is percentage, the remaining proportion is what we are saying, it's the NCI. So in that case, our full goodwill method will be this way, but now our NCI will be somewhere here. Our NCI will be somewhere here to add up to the what? Purchase consideration. So method or format for full goodwill method computation, goodwill method computation, goodwill method in format. This is very interesting, class. This is very interesting. This is very interesting. But before I continue, is there anyone here who has not joined our ongoing classes? Anyone? Anyone mwenye haja join our ongoing classes hapa? I don't think. I hope all of us have joined. Ama nani ana contemplate? Maybe you are retaking and you are contemplating whether to join or not. Anyone? If you are retaking, our charges are Kenya sharing 3,800. This information is for someone who is retaking and would like to do what? Would like to join. This is for maybe those students who we were with, the RCM students. You can just pay that. If you are not together with us, you just pay a reduced fee of 4,000. Remember the regular fee is Kenya sharing 4,800 in regular, 4,800 per unit. That is regular fee, 4,800 per unit, 4,800 per unit. Payment detail. So I have the pay bill here for the sake of you who would like to join us. 6242-839. And account number, put a file, FM like that, company law, PFT, unit name, abbreviated, unit name. To contact us, kindly use this number, 719-525-000, or alternatively, 0793 555-500. Those are simple numbers. So in case you have any question regarding this information, at the tail end of the lesson, we are going to do what? We are going to answer any question that you may be having. But for now, kindly capture that information if you need it. We allow 2 installments. For example, you may want to do 2 units or 3 units. You can pay maybe half of this times 3 or times 2. Half of this times 3. So 6,000. 6,000 you are able to join to be added to a paid group, and you continue learning, and then we give you a grace period of 1 month. So a date like this next month, you are able to clear your balance. You understand the economy is not that good. And don't ever forget that we have revision kits and also the study material going at a very lower price, lower prices. Good. Don't forget that. So for the revision kit, It's good to mention revision kits goes at 1,000 per copy. Then study text goes at 1,500 per copy. Per copy. Early morning and evening session for financial reporting, evening and morning session for the 2 units, financial management and financial reporting. So huwezi kuwa na reason ya kusema at your timing sijui nini, hapana. So for the early morning, this one happens from 5 a.m. to 7 a.m. Naona hiyo timing? Hapo mnasoma kabisa na mwalimu, alafu unaenda kazi. Then evening session start from depending the timetable 6 to 8 or 8 to what? 8 to 10 p.m. 6 to 8 or 8 to 10 p.m. What about advanced tax? Advanced tax. Do you have early morning, please? Advanced tax or the PFT, the normal for intermediate. For intermediate, we only have for evening. For intermediate, unfortunately, we shall introduce for the morning because there are those people who are not able to attend the evening session. We shall introduce the early mornings. Even advanced tax, we don't have the early morning. Advanced tax, we don't have the early morning, but we shall introduce them soon. We shall introduce them soon. But for now, under intermediate level, the 2 units, you know, these are tough. Therefore, mtu ukiingia lesson yenye you're not comfortable, umetoka kazini, umechoka, you're not even grasping anything, so that means you are wasting your time here. Now we have opted that we have a morning session before you go for work. At least you are able to study, then go for work. At least hapa uko fresh, you are able to concentrate. You're able to concentrate. So advantage for the two. For advanced level, if we have advanced level student here, we have leadership and management, advanced financial reporting, advanced financial management, both found in the early morning and in the evening. In the early morning and in the evening. So for advanced level, at least we have 3. Advanced level tuko na 3 zenye zinapatikana jioni na asubuhi. So that is the program. That's the program. And I hope it's favoring you. Depending on the schedule. So let's look at a full Goodwin method format. So plus for the full Goodwin method format, have sharings here. Purchase consideration. Then add NCI share. NCI or non-controlling interest. NCI. Just put them there. Then you put it there. You say total consideration. Total consideration. I'll be having my total consideration in that order. And then less net asset at the date of what? At the date of acquisition. Net asset at the date of acquisition. Now, I told you that net assets, those are items which are found at the equity section. And together with that, please note, this net asset at the date of acquisition, we're bringing them direct there. We're not apportioning them because already here we have like 75% tumechukua. Hapa tuko na 25% tumechukua. So there's no need of apportioning. Already now we are dealing with 100%. So you just less them the way they are. And if you have now maybe the impairment rate, you less your impairment to get the goodwill at what? Goodwill at reporting. Goodwill at acquisition date, and then less goodwill impairment or impairment of goodwill. Now that will be in a position to give you the goodwill at reporting. Goodwill at reporting. Goodwill at reporting. Goodwill at reporting, and this is the one that you're going to record under your non-current asset in your statement of financial what? Statement of financial position. Statement of financial position. Because I can see we are having 1 minute here. Now, how do we utilize the 1 minute? I think the best thing to utilize the 1 minute is for me to give you the number for our customer care, 95 or 93. Let's just use 93. 555. For any inquiry, kindly contact that number. She will be in a position to assist you. She'll be in a position to assist you. Otherwise, class, it has been a pleasure hosting you. Thank you so much for having time to attend our today's session. I hope you have learned something. In our next lesson, we shall be able to continue from where we have left. Right now, we know how to compute goodwill. We shall proceed and look at other principles before we do a question. Otherwise, I wish to sign out at that point unless there's a burning question. I wish to sign out. Is there a burning question? I want to address that as I sign out.